Hey, CPA candidates, welcome back to the channel. If you're tackling the FAR exam, you know that fair value measurement is a critical area. That's why today, we're diving deep into some multiple choice questions that will help you solidify your understanding of this topic. Let's get started. A company owns a financial asset that is actively traded on two different exchanges, Market A and Market B. There is no principal market for the financial asset. The information on the two exchanges is as follows. What is the fair value of the financial asset? The correct answer is C. To find the fair value, you 1. Calculate the net amount you'd receive in each market, price minus selling costs. 2. Choose the market that gives you the highest net amount. 3. The fair value is the original price offered in that best market, before selling costs. In this case, Market A nets $925. Market B nets $900. Market A is better, so the fair value is the original $1,000. Next question. On January 1st, year 1, a company purchased an operating asset for $150,000. The asset was acquired with a $60,000 cash down payment and a note payable for the remainder of the purchase price. As of January 1st, year 3, the company made principal payments on the note of $30,000 and expensed $37,500 in depreciation. On the same date, the company expects to receive $170,000 in a sale of the asset to an independent third party and estimates the sum of the undiscounted expected future cash flows from the asset to be $180,000. What is the asset's fair value at January 1st, year 3? The correct answer is C. The fair value of the asset is the expected sale price to an independent third party, which is $170,000, option C. This is because fair value reflects the market price a willing buyer would pay. Next question. Which of the following statements is correct regarding the decision to elect the fair value option for valuing financial assets and liabilities? The correct answer is B. It must be applied to an entire instrument and not to specific risks. When electing the fair value option, you must apply it to the whole financial instrument, not just parts of it. Next question. A company owns land and a building that houses its manufacturing operations. When the company purchased the manufacturing facility 10 years ago, the purchase price allocated to the land account was $120,000. The manufacturing facility is located in an area that was once the site of many factories. The owners of many of the neighboring factories have recently sold their facilities to residential real estate developers. The company's land is also suitable for residential development. The estimated current value of the land as part of the manufacturing facility is $150,000. The estimated current value of the land as an undeveloped investment is $130,000, and the current value of the land as part of a residential development would be $180,000. What is the fair value of the land? The correct answer is D. The fair value of the land is $180,000. This is because it represents the highest possible value the land could be sold for in its most advantageous market, which is residential development. Next question. On 12/31, a share trades at $100 on Market A and at $102 on Market B. If the transaction costs are $2 in A and $3 in B, determine the fair value of the share if none of the markets qualify to be the principal market. The fair value is $102, option D. You find the market with the highest net realizable value, price minus transaction costs, and that market's original price is the fair value. Next question. Which of the following statements is correct regarding fair value measurement? The correct statement is A. Fair value is a market-based measurement. It reflects the price in the principal or most advantageous market. Next question. Which of the following is a level 3 input to valuation techniques used to measure the fair value of an asset? The correct answer is C. Unobservable inputs for the asset. Level 3 inputs are by definition unobservable, used when market data is unavailable. While Level 1 use the exact same price you see for the exact same thing in a busy, active market, and Level 2 use prices of similar things, or other market data you can see. Next question. Which of the following is not a valuation technique approach used to measure fair value? The correct answer is D. Sales approach. Fair value is measured using the market, income, or cost approach, not the sales approach. Next question. Which of the following phrases best describes a Level 1 input for measuring the fair value of an asset or liability? The correct answer is D. Level 1 inputs are unadjusted quoted prices for identical assets in active markets. Next question. Which of the following is an example of a transaction involving a market participant? The correct answer is A. Option A is the only transaction involving independent, knowledgeable, and willing parties, which defines market participants. Next question. What is the priority level given to unobservable inputs in the fair value hierarchy for inputs to valuation techniques used to measure fair value? The correct answer is C. Unobservable inputs are level 3 in the fair value hierarchy. Next question. When valuing certain financial instruments, a company that has elected the fair value measurement option must apply the accounting measurement based on which of the following criteria? The correct answer is B. Fair value measurement, when elected, must be applied to each individual financial instrument in its entirety. Next question. McClave Enterprises used quoted prices for similar assets as the basis for determining the fair value of its investments. McClave's inputs for determining the fair values of the investments would be classified as which level in the fair value hierarchy? The correct answer is B. Quoted prices for similar assets are level 2 inputs in the fair value hierarchy. Next question. Which of the following is the market with the greatest volume or level of activity for an orderly transaction to occur for an asset or liability? The correct answer is B. The principal market is the market with the highest activity for a transaction. Next question. When the recoverability of a building's carrying amount is determined to be impaired, the building's fair value is best measured as the FIABID. The correct answer is C. Fair value for an impaired building is best measured using observable market data from its principal market. Next question. Which of the following is not a characteristic of market participants when measuring fair value? The correct answer is C. Market participants are not related parties. They are independent. Next question. Gioconda Inc. acquires an asset for which it will measure the fair value by discounting future cash flows of the asset. Which of the following terms best describes this fair value measurement approach? The correct answer is B. Discounting future cash flows is the income approach to fair value measurement. Next question. A company has an equity investment with a historical cost of $500,000 that is traded in an active market. At December 31st, year 1, the quoted price for an identical investment was $400,000, and the quoted price for a similar investment was $430,000. Using the company's internal present value of cash flows model, the company arrived at a value of $410,000. What amount is the value of the investment on December 31st, year 1? The correct answer is A. Use the quoted market price, $400,000, for the identical investment, as it's a level 1 input, most reliable. Next question. The details of a share's price from 2 markets are given as under. Determine the fair value of the share. The correct answer is B. Fair value is the price in the principal market, Market B, which has the highest volume of activity. Next question. According to the FASB conceptual framework, certain assets are reported in financial statements at the amount of cash or its equivalent that would have to be paid if the same or equivalent assets were acquired currently. What is the name of the reporting concept? The correct answer is A. Replacement cost is the current price to buy the same asset. Next question. Each of the following would be considered a level 2 observable input that could be used to determine an asset or liability's fair value, except. The correct answer is C. Level 2 inputs are observable market data. Internal cash flow projections are not directly observable. They are level 3. Next question. A transaction price cannot represent the fair value of an asset or liability at initial recognition, if the correct answer is C. Transaction prices with added transaction costs do not represent fair value. Fair value excludes transaction costs. Next question. Which of the following phrases best describes a level 1 input for measuring the fair value of an asset or liability? The correct answer is D. Level 1 inputs are direct, unchanged prices from active markets for identical items. And that wraps up our deep dive into fair value measurement MCQs. I hope you found those explanations helpful and that you're feeling more confident about this topic. Remember, practice is key. Review these questions, understand the reasoning behind each answer, and keep grinding.